Welcome to the tutorial on managerial accounting. This is the third part of the tutorial on master budgeting. We can see there is a interrelationships between the budgets in master budgeting, and in the first tutorial on master budgeting we have discussed the introductory issues as well as sales budget, including the schedule of expected cash collections. And in the second tutorial on master budgeting we have learned production budget, direct material budgets with the schedule of expected cash disbursement for material purchase, then direct labor budget, manufacturing overhead budget, and ending inventory budget. And this is the third tutorial on master budgeting, and in this tutorial we will learn selling and administrative expense budget and cash budget. Cash budget is very important budget, and in preparing cash budget we take data from all previous budgets as well as we also use some additional information for preparing the cash budgets. Now we are going to prepare selling and administrative expense budget. For preparing the selling and administrative expense budget, there are some estimated data by the managers. We can see variable selling and administrative expense per case is 1.80, and there are some fixed selling and administrative expense. I would like to remind you here that all the non-manufacturing expense should be shown in the selling and administrative expense, and in fixed selling and administrative expense we show all other non-manufacturing fixed expense. We can see advertising 20,000, executive salaries 55,000, insurance 10,000, property taxes 4,000, depreciation 10,000, and any other fixed expense which should be shown here. If you need to prepare separate budget for advertising by the marketing manager, then you can do it, but the total amount of advertising should be shown in the selling and administrative expense budget under fixed selling and administrative expense budget. In the same way, if you need to prepare separate budget for any other fixed selling and administrative expense, then you can do it by the respective managers of respective branch. Then the total amount should be shown in this selling and administrative expense budget. That means there may be sub budget or there may be supporting budget for salaries or insurance or any other expense, and the total of those budget should be shown under the fixed selling and administrative expense, but that should be non-manufacturing expense. However, now we are going to prepare the selling and administrative expense budget. This is the selling and administrative expense budget. In the first line we will show the budgeted unit sales, and this budgeted unit sales will be taken from the sales budget. We can see our budgeted sales are 10,000 in the first quarter, 30,000 in the second quarter, 40,000 in the third quarter, and 20,000 in the fourth quarter. From the estimated data we can see variable selling and administrative expense per case is 1.80. This variable portion should be multiplied by the budgeted sales. We are multiplying 1.80 with the budgeted sales. After multiplying 1.80 with the budgeted sales, the variable selling and administrative expense are 18,000 in first quarter, 54,000 in second quarter, 72,000 in third quarter, 36,000 in fourth quarter, and this is the 180,000 total year variable selling and administrative expense. Now we are going to show all the fixed selling and administrative expense. From the estimated data we can see the fixed selling and administrative expense are advertising 20,000, executive salaries 55,000, insurance 10,000, property tax 4,000, depreciation 10,000. Since they are fixed, there will be equal fixed amount for each quarter. Here advertising 20,000, advertising 20,000 for each quarter. In the same way, executive salaries 55,000 fixed for each quarter, and insurance 10,000, here 10,000, 10,000, 10,000, and property taxes we can see 4,000 for first quarter, second quarter 4,000, third quarter 4,000, fourth quarter 4,000, and depreciation 10,000, and remaining also same 10,000, 10,000, 10,000. So these are the fixed selling and administrative expense. If we sum up all the fixed expense, we can see 20,000, 55,000, 10,000, 4,000, and 10,000, total 99,000. We are adding only the fixed portion here. 99,000 is the fixed portion of the selling and administrative expense budget. In the same way, the remaining quarters, I mean second, third and fourth quarter, there would be 99,000 for each quarter. Since they are fixed, that's why there is a same amount in the all quarters. And our variable selling and administrative expense is 18,000 for first quarter, 54,000 for second quarter, 72,000 for third quarter, and 36,000 for fourth quarter. This row is showing the variable portion, and here 99,000 is showing the fixed portion. In total selling and administrative expense, we will add this 18,000 plus 99,000, total 170,000. Here 54,000 is the variable and fixed, 99,000 total, 153,000 total selling and administrative expense. Here 72,000 is the variable and 99,000 fixed, and total 171,000. And here variable 36,000 and fixed 99,000, total 135,000. So this is the total selling and administrative expense row. And since we are going to prepare a cash budget, for the purpose of preparing cash budget, we need to show the cash amount from this selling and administrative expense. That's why, although this row is showing the actual selling and administrative expense budget, but for the purpose of preparing cash budget, we will deduct the depreciation to get the cash disbursement for selling and administrative expense. That's why we are deducting this 10,000, but you should not be confused. This is the actual selling and administrative expense budget, but we are deducting 10,000 because it's a non-cash item, and for preparing cash budget we will include all the cash related items. That's why after deducting the depreciation, our cash disbursement for selling and administrative expense are 107,000 for first quarter, 143,000 for second quarter, 161,000 for third quarter, and 125,000 for fourth quarter. And this is the total column. Now we are going to prepare cash budget, and before preparing cash budget, we are going to discuss some introductory issues on cash budget. We can see cash budget has 4 sections. The first section show the cash receipts, and the second section of cash budget is for cash disbursement, and the third section of cash budget is cash excess or cash deficiency. There may be any one. There may be cash excess or there may be cash deficiency. And the last section of cash budget is financing section. In the receipts section of cash budget, we show all cash inflows. That means we show the beginning balance as well as cash collection from the customers after selling the products or services. And in the disbursement section of cash budget, we show all the disbursement like cash disbursement for or cash payment for raw materials purchase, for direct labor payments, for manufacturing overhead cost, for selling and administrative expense or any other expense, as well as if we make any equipment purchase, if we pay dividends, that means all other payments or disbursement should be shown in the second part or second section, the disbursement section of cash budget. And in the third section, we show the cash deficiency or cash excess. If the disbursement is higher than the cash receipts, then there will be a deficiency. But if the cash inflows or cash available is higher than the cash disbursement, there will be a cash excess. And ultimately, if there is a cash deficiency, you need to borrow money, and if you borrow the loan, then you need to repay the loan with the interest. That borrowing and repayments of principal, loan and interest would be shown in the financing section. And these are the four sections of cash budget. You will get clear idea when we will prepare the cash budget. For preparing the cash budget, there are some estimated data, and as well as we need to take data from the earlier schedules or earlier budgets. For preparing cash budgets, we should take data or information from the previous budgets like sales budget, ending finished goods inventory budget, production budget, selling and administrative expense budget, materials budget, labor budget and manufacturing overhead budget. From all budget, we will take data to prepare the cash budget. As well as we need to consider some other additional data for preparing the cash budget. We can see the beginning cash balance is 42,500 and management has a plan to purchase equipment total 130,000, and among this 130,000, the first quarter equipment purchase is 50,000, in second quarter 40,000, in the third quarter 20,000 and in the fourth quarter 20,000. Total 130,000 equipment purchase. And the board of directors has approved cash dividends 8,000 per quarter, and there is a policy by the management that they will keep minimum cash balance 30,000 for the beginning cash balance of each quarter. If there is a deficiency in the cash balance, then there is an agreement between the bank and the company, and the agreement is showing that the company can borrow in increments of 10,000. They cannot borrow in fraction. There should be borrowing amount which would be 10,000, 20,000, 30,000, 40,000, 70,000, 80,000, 90,000. This way they can borrow money. If they need 11,000, they cannot borrow 11,000. They will need to borrow 20,000. They can borrow in the increments of 10,000. However, in total, they can loan up to 250,000. And for the borrowing, they need to pay interest, which has 1% interest rate per month. And for simplicity of preparing this cash budget, we assume that interest is not compounded. They will pay simple interest. And there is another assumption for the simplicity of preparing this cash budget for easy understanding. The assumption is that they will repay the loan plus the interest at the end of year. From this information and from the data from previous budgets, we are going to prepare cash budget. This is the cash budget. We can see there are 4 sections. In the first section, we will show the cash collection, then we will show cash disbursement, then there would be cash excess or cash deficiency, and the last section is financing section. We can see in the cash collection or cash receipts section, we will write the beginning balance. From the estimated data or from the data, we can see the beginning cash balance is 42,500. So we are writing the beginning cash balance 42,500 in the first quarter, and with this beginning balance we will add the cash receipts from customer, and this amount would be taken from the schedule of expected cash collections. In the first tutorial of master budgeting, we have shown how to prepare the schedule of expected cash collection. From this schedule of expected cash collections, we will take the data for preparing the cash collections in the cash budget. We can see the cash collection in the first quarter is 230,000, in the second quarter 480,000, in the third quarter 740,000, and in the fourth quarter 520,000. This data or this information will be taken to the cash budget for showing the cash collections. We can see in the first quarter 230,000, we can see 230,000, and in the second quarter 480,000, here 480,000, in the third quarter 740,000, third quarter cash collection 740,000, and in the fourth quarter 520,000, we can see 520,000. These are the cash collections. And in the first quarter we can see our beginning cash balance 42,500 and our cash collection is 230,000. This is the beginning balance and this is the collection. So total cash availability in the first quarter is 272,500. By adding this 42,500 with the 230,000, we will get the 272,500 as the cash availability in the first quarter. And in the second section of cash budget, we will show all the cash disbursement or cash payment, and for this section we will take data from the previous budget as well as from the additional data. We can see we will take the cash payment for direct materials. We can see 49,500, 72,300, 100,050 and 79,350. The data for cash payment for purchase of material would be taken from the schedule of cash disbursement for material purchase. This is the schedule of expected cash disbursement for purchase of materials, which was shown in the second tutorial of master budgeting. We can see in the first quarter we need to pay 49,500, in the second quarter 72,300, and in the third quarter 100,050, and in the fourth quarter 79,350. These are the cash payments for material purchase. Then we need to show the cash payments for direct labor, and this amount would be taken from the direct labor budget. This is the labor budget and it was shown in the second tutorial of master budgeting in the previous tutorial. However, we can see labor cost for first quarter 84,000, second quarter 192,000, third quarter 216,000 and fourth quarter 114,000. This cost will be shown as a cash payments for direct labor, and we can see direct labor, these are the cost which was taken from the direct labor budget. Then you can see cash disbursement for manufacturing overhead cost, and this amount would be taken from the manufacturing overhead budget. We can see this is the manufacturing overhead budget which was prepared in the second tutorial. However, we can see cash disbursement for manufacturing overhead 68,000 in the first quarter, 96,800 in the second quarter, 103,200 in the third quarter, 76,000 in the fourth quarter. These are the cost we have shown: 68,000, 96,800, 103,200 and 76,000. These are taken from manufacturing overhead budget. And after that we will show the cash payment for selling and administrative expense budget. This will be taken from the selling and administrative expense budget which was prepared before preparing this cash budget in this tutorial. We have prepared this budget in this tutorial, our cash disbursement for selling and administrative expense are 107,000, 143,000, 161,000 and 125,000. This would be shown as a cash disbursement for selling and administrative expense budget in the cash budget, and we have shown already these are the expenses taken from the selling and administrative expense. From the additional information we can see the management are interested to purchase equipment total 130,000, and from that 130,000 in the first quarter 50,000, second quarter 40,000, third quarter 20,000 and fourth quarter 20,000. So we have shown equipment purchase first quarter 50,000, second quarter 40,000, third quarter 20,000 and fourth quarter 20,000. From the additional information there is a dividend payment 8,000 per quarter. So 8,000 is shown in the each quarter because there will be a dividend payment, and these are the total cash disbursement. We can see in the first quarter total cash disbursement would be calculated by adding 49,500, 84,000, 68,000, 107,000, 50,000 and 8,000. Total 366,500 disbursement. By adding this amount we will get the total cash disbursement for the first quarter. We can see 366,500. In this first quarter our cash availability is 272,500, but our cash disbursement is 366,500. Our payment or disbursement is higher than the cash availability. That means there will be a deficiency. Deficiency arises when the payment is higher than the cash availability. In the first quarter our payment is higher considering the cash availability. That's why there would be a deficiency. We are showing the amount deficiency in the bracket. Our first quarter has a deficiency up to 94,000, and according to the management policy they are interested to keep minimum opening cash balance equal to 30,000, but from the calculation we can see they don't have any opening balance, rather there is a deficiency. That's why the company need to borrow from the bank, and from the question we can see there is a loan agreement in which they need to borrow in the increment of 10,000. For your clear understanding I am showing calculation. We can see the company has deficiency 94,000 and they are interested to keep minimum ending balance, because this ending balance for first quarter would be the opening balance of second quarter. The minimum ending balance is 30,000 and there is a deficiency 94,000. That means the company need to borrow 124,000, but the bank does not provide any fraction, they provide in the increment of 10,000. That means instead of 124,000 the company need to borrow 130,000. This is the increment of 10,000. They don't provide any fraction here. 124,000, this 4,000 is a fraction, and that's why according to the loan agreement the company need to borrow up to 130,000. In the financing section we need to borrow 130,000, and since there is a policy by the company that they will not repay the loan or they will not pay the interest up to the last quarter, that's why there is no repayment and interest. And here only one item, but if there is any repayment we will deduct it, but since there is no deduction for repayment or interest in the first quarter, just we are showing the 130,000 as a total financing, and this amount should be adjusted with the excess or deficiency. I am repeating, here total financing is 130,000, this amount should be adjusted with the excess or deficiency. Here we can see there is a deficiency and we have financed 130,000. That means if we deduct 130,000 from the deficiency 94,000, there will be a ending cash balance. To calculate the ending cash balance we need to adjust the item excess or deficiency with the total financing. Our financing is 130,000 and our deficiency is 94,000. So there would be a ending cash balance 36,000. The ending cash balance of first quarter would be the opening cash balance of second quarter. I am repeating, the ending cash balance of first quarter would be the opening cash balance of second quarter. On the other hand, we can say the opening cash balance of second quarter should be taken from the ending cash balance of first quarter. So our opening cash balance of second quarter is 36,000. We have taken it from the ending cash balance of first quarter. That means our second quarter opening balance 36,000, and already we have shown that this is the cash collection from the customers 480,000. So our cash availability 516,000. This is the cash availability, and already we have shown this item. So our cash disbursement is 652,100. This is the cash disbursement, and this is the cash availability. Here there is also higher payments considering the cash availability. That means there is a deficiency 36,100, and according to the company policy, they are interested to keep minimum cash balance 30,000. For maintaining this cash balance, company need to borrow. They have deficiency 36,100 and they are interested to keep minimum cash balance 30,000. That means they have deficiency 36,100 and minimum desired ending cash balance 30,000. They need to borrow 66,100, but the company don't have any agreement to make loan in a fraction. That's why the company will get 70,000 from the bank. That means the company need to borrow from the bank this 70,000. So this is the financing according to the company policy. The company don't need to repay or pay the interest in the second quarter. They will repay the loan or pay the interest in the last quarter. That's why total financing would be 70,000. I am repeating, this row should be shown by adjusting this 3 item. Okay, and since our total financing is 70,000 and we have deficiency 36,100, by adjusting these 2 items, ultimately we will get ending cash balance 33,900 by deducting 36,100 from the 70,000. This is the ending cash balance of second quarter. This ending cash balance would be the opening cash balance for third quarter. So our opening cash balance is 33,900. In the previous discussion, we have shown that our cash collection in the third quarter is 740,000. These amounts are taken from the expected cash collections. However, our cash availability 773,900 and our cash disbursement is 608,250. Here we can see our disbursement is lower than the cash availability. That means there would be an excess of cash. I am repeating, our cash availability is higher than the cash payment or cash disbursement. That's why there would be an excess of cash. That means we don't need to borrow any money from the loan, and this would be shown as a ending cash balance of third quarter. Since we don't have any borrowings, we don't need to adjust the financing rows. That's why our ending cash balance would be 165,650. This ending balance would be shown as a opening balance in the next quarter, I mean fourth quarter. And in the fourth quarter, our cash collection from the customers is 520,000. So our cash availability is 685,650 and our cash disbursement is 422,350. Here our cash availability is higher than the cash payments. That's why there would be a excess of cash. Our excess cash is 263,300, and according to the company policy, we can see the company repay all the loan in the last quarter, and they need to pay interest rate 1% per month on the total loan. This is the excess of fund. Since we have excess of fund and we have a policy to repay the loan as well as the interest from the excess fund, that's why we need to calculate the interest as well as we need to pay the loan. Our total amount of loan is, we can see here, we have taken loan 130,000 in the first quarter and in the second quarter 70,000. Total loan 200,000, and this amount would be repaid in the last quarter. We can see repayment at the end of year 200,000. We need to also pay the interest. Now we are going to show the calculation of interest. But for calculating, I am repeating, we have taken loan 130,000. This loan has been used for the all quarters, and this 70,000 loan is taken in the second quarter. That means this 70,000 worked for the remaining months, I mean 9 months, and this 130,000 is used for 12 months. We can see this is the calculation of interest. We have used 130,000 for all quarters, and per quarter interest is 0.03. You can also multiply by 1%, then multiply by 12, because we have used 130,000 loan for 12 months and our per month interest is 1%. However, they have converted this 1% interest into quarter. We can see per quarter interest rate is 0.03. That means for 4 quarter they need to pay 15,600 for 130,000. We are showing this detailed calculation for your easy understanding, and the remaining 70,000 they have used this loan for 9 months. So 70% multiplied by 1%, by multiplying 9 months we will get the 6,300. And you can also calculate by using this format. They have converted the 1% per month into quarter. They have multiplied by the quarters. Whatever be the process, the answer would be same. And this is the total interest. This 15,600 interest for the 130,000 and 6,300 interest for the 70,000. Total interest 21,900. And now we are going to paying the interest 21,900. We are going to repay the loan 200,000. Total financing section, we can see we need to repay 221,900. This is the total financing, I mean payment for financing, and we have cash availability 263,300. That means our ending cash balance in the fourth quarter is 41,400. This amount is calculated by deducting this 221,900 from the 263,300. And this is the process of calculating the cash budget. In the year column we have shown all the totals except 2 items. Here you can see our beginning cash balance 42,500, and in the year column we are showing the first quarter opening balance as a total year column. But in this row we have shown the total amounts, but only 2 items. Here we can see opening cash balance and the ending cash balance. We will show these 2 amounts in an exceptional way. I am repeating, the year column the opening cash balance should be shown from the balance of opening cash balance of first quarter, and in the ending or closing cash balance we will show the last quarter closing balance in the total column. Except these 2 items, opening and closing cash balance, all the items should be shown by adding the total rows. That means in the year column all the items should be shown by adding all the items in the row. For my students, I would like to suggest you that if your ending cash balance and the closing cash balance of total year is same, that your budget is correct. You can also calculate this 41,400 by adjusting this 63,300 and 21,900. We can see if you deduct 21,900 from the 63,300, you will get the 41,400. And to get the 21,900, you need to adjust these 3 items. Total financing should be shown by adjusting the 3 items in the financing section. And this is the way you can prepare the cash budget. Thank you. This is the end of third tutorial on master budgeting. In the last tutorial, in the fourth tutorial of master budgeting, we will show how to prepare the budgeted income statement and budgeted balance sheet.